most people say you can't time the market, I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3Live.
Futures are basically flat this morning with the market closing at highs yesterday. Fed minutes will give some clues to their pace of purchase moving forward. Traders are a bit skeptical, but the trend has been strong. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, the Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So markets extended to multi-year highs. Today, investors will be paying attention to the Fed minutes later this afternoon to look for clues about pace of purchase for the rest of 2013. Scott, what should traders also be focusing on today?
Well, I think as far as the minutes, they're trying to figure out, do they lift their foot off the gas? And do they go away from the $85 billion in asset purchases? And I feel like at this point, you know, the bears are running out of things that could potentially they could obsess about before, you know, or reasons to maybe take some profits off the table. And you know, today the Fed minutes, we'll see what happens there. Then the next thing I think traders are going to be looking at is the sequester that I think already people are actually happy if it happens because we know we need those cuts. So all in all, everyone's looking for excuses not to be in the market, but meanwhile the market continues to trend higher and follow, you know, all the important moving averages.
Exactly, and with the S&P stretching to new 52-week highs again on Tuesday, what are the levels you're watching in the S&P?
Well, yesterday we took out another pivot resistance. So if we go to the chart of the spiders, we've had this same trend as we've been following it since the beginning of the year. Here was your gap up to start 2013, some consolidation, some digestion, a good spot to put on some longs and get in your portfolio approach. This is when we took out 1474 and then started the trend to the upside. You know, we've been following this trend, and they say the trend is your friend. It's for a reason. You know, we've only tested the 8-day like twice here, you know, along, you know, what's been already almost 7-8 weeks of 2013. And then yesterday we stretched above the recent pivot high here. So the pivot high that we talked about yesterday was 152.61, and this is where we close. So now here's your new high. I think maybe we go sideways just like we did here, and then we can continue. But as of right now, you know, there hasn't been a correction, and you know, you don't need to be all in at different spots of the trend, but guys fighting it are very frustrated.
Now, what if we pulled up a longer term chart? Would that help us see how close we are to historic highs?
Yeah, we've been talking about the double top in the S&P, and you know, we've talked about the road to 1700 and how to get there and how to navigate it. If you go take a look at the chart of the monthly chart of the S&P, you will see, you know, look how close we are. You know, this is we had actually a conference here, so I was talking about the macro picture. Here is your double top in the spiders, okay, which comes in around 155, and then this is like 157. So look how close we are. We're 153.25. You know, so as far as this whole decade, this was like the decade of the market timer, depending on who you are, where you had an ascending channel that resolved to the downside. Okay, and then this descending channel resolved to the upside, back down to the downside. And now we've been trending since this red dog reversal here. Look at that outside day, beautiful. Then you have a low, a higher low, another higher low. So as we approach the resistance, you know, a few things could happen. Either, you know, it will bring out some sellers, okay, then everyone will say, oh my goodness, a triple top, and then we'll see it short term, and then perhaps we retrace a little bit. But I do think it's only a matter of time for us to take this out. And I think 2 years ago we talked about the road to S&P 1700 by 2015. It's probably going to happen a bit sooner.
All right, well, let's turn the spotlight to social media stocks where we're seeing some action. Let's start with LinkedIn, which actually took a break yesterday after a few periods of extending much higher. Now, the stock did manage to close at highs. So what are the key levels you're watching there?
Well, now it's like how the trade changes from a core trade to a momentum trade or whatnot. At this point, all you could do is really tactically approach LinkedIn. So many people are saying, oh, it's so extended I can't touch it. But meanwhile, these momentum names have not given you spots to buy the dip. And yesterday was one of those, I guess, rare times. And if you look here at LinkedIn, you will see, this was the gap up after earnings. Okay, if you were a macro investor, hopefully, you were involved because you take stock into earnings, which a lot of traders don't do. And this chart was really set up, I think we tweeted about it, we talked about only a matter of time for it to break above this 125 for a move to 155. Well, it exceeded that. This is an unbelievable cup and handle pattern. Write this pattern down. You have your cup, here's your handle, here's a channel, and then boom. So at this point, question is, what do you do now? If you're long some long term, I think you stick with it. It's not such a bad idea to trim and trail. If you're looking to actively approach it, here's your next level or sets of points. Okay, this is the previous high here, which it held around, which around 158, and now here is 163. If this gets above 163, the momentum can continue. It paused for 3 days after this, $2 extension, and now here's your 2 days. So we'll see if it goes. I think it was upgraded today with an $180 price target. So I do think at some point in this year it does get there. Let's just hopefully it doesn't happen too quick.
And Facebook also woke up a bit yesterday, gave investors an opportunity for a nice trade. This is a stock you've said the highs are not in for the year yet. How could investors have taken advantage of the opportunity they saw yesterday?
Well, by me saying that, I'm trying to give some with a longer-term approach the conviction to stay with it. And stocks have ebbs and flows, and as traders, you can take advantage of it. As investors, sometimes you can't do it as frequently. So with Facebook, we've had two different types of trade. We started the year where it was pretty clean and gave us a nice move into earnings, and then since then, it's had some corrective activity, which has been frustrating for some traders. But as a macro investor, it probably has been frustrating you if you had the right entries. If you look here at the chart, this is when, to me, the whole trade changed. When it held higher, held in front of the earnings gap. It gave you a nice move to fill this gap over here, which was a nice trade for guys, who were looking for it. Then it consolidated and went sideways and then continued again. And then right here, a lot of guys sold because they don't take it into earnings. And then you had some corrective activity. So now here's your descending channel. Yesterday, it poked its head above it. So, at the point, this was a decent add. So I would say right now, important supports around 28. If it gets above yesterday's high today, 29.08, maybe guys will add to it. And then I think ultimately, taking more of a macro look here, I do think that, this high, which is right here, does get taken out. And if it does, the next spot would probably be to test this gap from when the initial public offering happened, right around 36.60. But right now, decent spot to have maybe even a tier 2.
Now, as for YELP, the stock got rejected by its intermediate resistance again yesterday. Above what level could we see it get back in motion?
This one's been tricky, and I still think it's trying to find an identity because so many different companies are coming into their business space, and every time someone mentions what they're going to do and if it infringes on their business, whether it's LinkedIn, whether it's Facebook, whatever, it sells off. But it's been hanging around. So just on a short-term level, you look at this chart here, you do have a bit of a tight pennant. So I would say traders for a trade will be looking for it to get above 22.65. It gets above 22.65. It could get back up to bigger resistance. If you look at the macro chart of YELP, it hasn't been public for that long. But ultimately, if you look at this big channel, it's sloppy. You have big support down at 16. You have big resistance coming in at 30. It's in the middle spot here. So I would say as a trade, maybe it gets above this area and then tries to get back into the upper zone. But this is not best in breed right now. It's just still trying to build a macro pattern.
And Groupon has been stair-stepping higher. Above what level do you think it really might find some power?
You know what, this one is just one of those treasures for trash trade. Anyone that bought it and got excited about it with the media, hype going into Facebook, they definitely got battered and bruised with some of the other ones. If you look here, since it came public, look at that, how it just reversed, and then since then it's been trending lower. Lately we talked about 550. 550 was a decent, area. We thought maybe it can get a little bit better, for an entry, and here it was right there, right around 550. And it seems like it's not very exciting right now, but I do think it could fill this gap all the way up to about 7, which is a nice percentage gain from 550 if that's where you entered, and then the 200-day 783. So I still think there's some room here. Obviously not a leader. This is a laggard, type of catch-up trade, and it's not for everyone. So I would say as long as it stays above, 550, stay with it. If it breaks back below 550, I would just, stop out and say it's an avoid.
Okay, well, coming up, we're going to go in the trenches with Homebuilders. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Ahead of January housing starts at 8:30 today, we're checking in on the home builders. Scott, let's start with the XHB first.
Yeah, well, this group has been a leader for like the past year and a half. Last year we started talking about perhaps a low in housing prices, and then the housing stocks were just on a tear. And recently they've been getting a little choppy. So guys looking for a retracement in the overall market are trying to point to the home builders as maybe some clues that we can pull back. And if you look here at the XHB, which is the ETF, this was where we started the year, where we gapped above those September highs, and it's been a leader. And then you had a descending channel where it consolidated, held the 21-day, broke out again, and then still we're on like day 4 of a consolidation, which is pretty rare, it seems like, in the market. So here we are trying to hold the 21-day moving average. I know, we'll talk about Toll Brothers, but if those earnings aren't perceived as good enough and it doesn't bounce, perhaps we close below the 21-day for the first time, and then that could maybe bring out some overall sellers in the market, and then you have your big support down here at the 50-day. So as of right now, I would say this is a pretty big clue to see whether or not one of the leading groups breaks an ascending channel here, and that's something that traders are watching. Well,
let's transition then to Toll Brothers, which reported first quarter earnings today and doesn't seem to be impressing investors. So what are you making of Toll?
I think it's something to watch. If it's a gap and go to the downside where it opens down 2% and then closes down 5%, I think some fast money will leave that group, and then some fast money will also be saying, you know what, could be time for an overall market correction as we are extended. So if you look here at Toll Brothers, I would say, here is some pretty significant support right here around the 50 days. So this is important. Does Toll Brothers hold the 50-day around 34.57? If it does, I still think it's intact, and that might be a decent spot to buy the dip. But if it doesn't and it breaks below it, that could be one of the signs that some of the armor is getting a little weaker in this group.
All right, let's check in on some of the other home builders, starting with Zillow, which after a gap up last week seems to be basing above it. Should we be keeping an eye on that gap for clues about direction?
Well, Zillow is kind of like a gauge because it's a website for all the home building or the housing stocks or in the listings, and it's been acting well. So I wanted to put this in the group, and you look here, it had a nice gap up like you said, Britt, and it's basing. So we talk about how if something gaps up and doesn't fill the gap, it shows power. So for a trade, if this were to start getting above this, what is this, 45.38, I think that it could be a decent trade, and maybe this is a barometer of the overall housing market, because the more activity that Zillow gets, the more it looks like people are trying to buy a house, and that could be very a good indicator for the overall economy, because a stronger housing market would help out the overall economy, which we've been seeing signs of.
Okay, and Ryland got hit yesterday. Its share slipped almost 3%, and the stock lost its 8 and 21 day. Could this be a buying opportunity?
That's what people are trying to figure out. Can this trend be supported? And if this trend breaks, again, people are going to look at it, and maybe that'll help give clues that the market's finally ready to retrace. And if you look at Ryland, this is a critical spot, so to speak. Look at this trend that's been in place, and look where it closed. So you did have some signs well before this. I talk about when something opens at highs and closes on lows an outside day. This was a nice sell signal there. Then you want to look at an accelerated trend. Here's your accelerated trend. After that, that wound up breaking. So if you didn't sell here, you could have sold here, or some guys might have even gotten short. And now look where we're at. We're almost below the 50-day at a bigger trend line. So you're seeing some faulty signals in Ryland. So hopefully you use these signals to sell some of your stock if you're there. And now I think you use this as a clue for the market. If it breaks below, just say 36.85 and can't get back above, I think there are going to be a lot of bears pointing to this.
Now, what about Lennar, which had a small loss yesterday, but managed to trade around its key moving averages? What are the levels you're watching there?
Same type of thing. Lennar is trying to hug the 50-day, and maybe on the Toll news, if it breaks and closes below, I think that's going to raise some question marks about the composure moving forward here.
All right, let's do some quick hits here, starting with Microsoft, which has reclaimed some key moving averages. What's the next resistance level it needs to break above?
This one I've been holding for a little bit, and I actually added yesterday because I sort of like the pattern. It's a laggard pattern. You take a look here. It's a quick hit, so I'll try and make it quick. Here is some big resistance. So at this particular point, I look for tight patterns. It's holding higher, holding support. So if this were to get through, just say 28.10, perhaps we see a move to test the 200-day. This is by far not a leader. It's hard to buy these mega caps, when there's momentum. So I'm trying to look for a laggard type catch-up trade. So I do think keep this on your radar. And if it does break above 28.10 and holds it, I might add more for some cash flow.
And Apple, conflicting news coming out about the hiring freeze at Foxconn over weakness in demand for the iPhone 5. This stock, what do we do with it?
I ask myself that question every day, and I am a little bit long it. So I woke up this morning, I'm like, oh my goodness, what are we down 7 points? It tried to reverse yesterday, and we've been making some money playing multi-day bounces, and they've been far and few between. So after a 4-day pull-in, after last week's hoopla, with Einhorn and Greenlight and whatnot, I thought maybe it was a decent spot. You look at the chart here, the trend has been major to the downside, where here's your high, here's your descending channel, which it has not been able to break above. I thought perhaps, I could cheat a little bit and maybe it breaks this mini downtrend. And so, I did get long, made some money in it yesterday, but then, today will be an interesting thing to see how it handles 453.85. If it can't get back above 48, it could be there now, I don't know, but if it can't get back above 453.85 in the first hour, I'll probably just salvage a trade, take my loss, and avoid it, because then you'll have another, smaller trend line get broken, and then the next support doesn't come in for Apple until about 442, then 435. So I think today is going to be a key day. Is it a nail in the coffin of anyone that's trying to, play some type of bounce, and or is it going to reverse and then, be back in the game for what could be a better trade? But right now we don't know. All
right, so important to watch Apple today. But then Amazon had a nice up day yesterday. Stock bounced off its 21-day. Where's resistance and support here?
This one, to me, I like the setup. It's acting stronger. It's been a little faulty since earnings, but it woke up last week. If you look at the chart here of Amazon, you will see that you had an igniting bar, which broke this downtrend last week, this descending channel. I know that it looked like it was going to break the 50-day, and it didn't. I actually lost a little bit short there. So here it broke above. Here it's showing some commitment. So I am long some, and I'm not sure what it's doing right now. I think it was down like 40 cents, but if it can get above this 270.65, I will add for some cash flow. So I like this setup. This will probably be on a lot of our traders' radars today.
And let's just touch on the TBT really quickly, which has had some pressure at the 69 resistance level. Are you watching it for a breakout above it?
Yes, and this is one of my theses, is that this can continue higher this year, but as a trader it's been choppy. But at a key level I get excited or interested, because at key levels you could have some nice action. So if you look here, you will see that it's approaching really big resistance. So here is that resistance, which I'll show you on this chart. But overall it's been holding higher, and the higher the market goes, the more people are going to think the bonds are going to sell off and interest rates might go up, and we will probably get some action with the Fed minutes today. So yesterday it closed sort of strong. If this were to get above 69-ish with some kind of authority, I do think you're going to get another move. But if you're playing for momentum here, it's tough. If you buy it through 69, make sure it holds 69 and extends and doesn't do a push through failure.
So we do have January housing starts today. We have the Fed minutes. Where's your focus heading into trading today?
Well, I entered yesterday with like 4 or 5 positions with some risk down, and then throughout the day I wound up going back to 8, 9 positions because the setups pulled me back in. So it feels like every time, it looks a little faulty, but we wind up hanging out and hanging in there, and there's really nice rotation. So I'm going to see, I'm going to look at Apple obviously to see if it could hold yesterday's low and see if there's any action there. I'm going to see, high beta tech, not that many setups there. I think Google, the setup's gone. Amazon, I like that setup. And then you have to look at housing. The housing sector has been a leading sector for almost a year and a half now, and you're seeing some of them come into the 50-day, which we haven't seen in a while. So I want to see how it handles that zone to maybe give me clues that I could add to my hedges a little bit more and perhaps have a little less risk and see some type of pull-in that people have been talking about for months.
All right, and with that said, happy trading, everyone. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.